another edition of 60 Minutes in Black America. We've got a great show for you today as we talk about inflation and the economy in the United States, and particularly the Black economy in these United States. Don't go anywhere. We'll be right back. Good evening. My name is Mike Haynie again, and welcome to another edition of 60 Minutes in Black America. Thank you so much for being with us this afternoon. And first, let's congratulate the LSU women for winning the national championship just a few minutes ago, 102 to 85 over Iowa Hawkeyes. And congratulations to Iowa and Caitlin Clark as well. What a great, exciting series, and we're all looking forward to the men's series. They have a lot to live up to what these ladies did tomorrow evening as well. I'd also like to thank last week guest host Catherine Evans, as well as her three guests in celebration of Women's History Month. Awesome job, awesome response. Thank you, viewers, again for watching. And as I said a couple of weeks ago, the viewership has been outstanding as it was last week. And I attribute it to the fact that we bring on conversations and content that are relevant and important to our communities, regardless of where you are. You know, today we have two dynamic financial speakers in the studio, one from Oakland, California, the other one just outside of Providence, Rhode Island. So we also bring you speakers, dynamic speakers and guests from around the country as well, because as we said when we started this show 2 years ago, the only way that we can continue to progress and get better as a community is if we compare notes and look at best practices. So today, we're going to talk about best practices and communities as it relates to inflation. I don't know about you, but since 2021, my value of my dollar has gone down considerably due to inflation, which I think hovered somewhere around 8%. And if you don't understand what inflation is, and I urge all of you to hang in here tonight, in spite of the fact that the conversation may not be something that you're used to, it's something that we have to begin to understand as a community, the financial wherewithal of how money, how currency is decided in America. It's important and it's relevant that we understand. We have to understand what crypto is. We have to understand what Bitcoin of crypto is. We have to understand what inflation is. We have to understand what our reactions are as a community to things that could harm us. One thing that they continually say about our community, when the rest of America catches a cold, and inflation was a cold, our community catches the flu. And I think that it's a flu that we can avoid if we understand what the right medication and what it is that we have to do as a community to offset flu-like symptoms. And it's a matter of understanding economically and financially what our options are. So we're going to go through and explore that with Jamie Miner out of Rhode Island and Kamal Hubbard out of California as we talk today about financing and various degrees of financing and various ways to finance and what the future looks like relative to finance. Everyone has heard about the banking crisis recently in terms of the failed savings and loans. And is that symptomatic of what happened back in the early 2000s when we had bank failures and the housing market crashed? Or is it an opportunity for us as a community if we understand strategies around that? And so what I'd like to point to you is the first strategy within our own households. So if inflation is defined as a increase of pricing year over year usually is the measurement. So what we paid for a dozen eggs in 2022 compared to what we pay in 2023, the difference of up is inflationary. And that's what we're dealing with wholesale in terms of many of the costs, particularly relative to food and gas, which affects our economy more so than other economies because we are so much different in terms of the wealth gap is so much different in our community compared to other communities here in America. And I am sure as we move into the Easter season, given the price of eggs, which spiked upwards of close to $8 a dozen in some markets from $2 a dozen in 2021, that we are not going to be having Easter egg hunts and leaving Easter eggs on the lawn to rotten and spoil and let kids play with. I'm sure we'll go to the plastic Easter eggs in terms of celebrating the Easter Bunny and other things. And that's just to say that in our households, what are we doing to offset gas prices? What are we doing to offset the increase of foods? How are we supporting our businesses, our Black businesses in the community? Because again, that's another example. Just as we saw during the pandemic, when other businesses in the United States suffer a bit, we suffer mightily. So tonight we hope to touch your conscience and have you understand what some of the tools you can use in your families and individually to help with some of the financial disparities that you may be suffering as a result of what the economy is going through. And are we at a point of going into a recession? And we'll ask our experts when they come on what a recession is and what are the signs of a recession. But I urge all of you to hunker down, ensure that you're aware if your salary hasn't gone up 8 to 10% and pricing has gone up 8 to 10%, then chances are you are feeling the effects of an inflationary market. So before we bring our guests into the studio, I want to play this brief clip. And the importance of this clip to me was the necessity of us as a community being aware and attentive of the stability of our businesses and the need for each of us to support our businesses and our community as well. So can we play that clip, please?
Elsewhere. So one of the challenges that we're seeing is it's important that people support small businesses. It's just not the time to turn your back on small businesses. And this individual is very direct with me and said the customers that they had, quite frankly, disappeared. And from a Black business perspective, she said that they went from her business to other businesses across the city and into the suburban areas. And more, quite frankly, they went to white businesses. So the bottom line is it's important that we continue to allocate and spread your resources appropriately and also choose to support those small Black businesses that account for a significant part of Detroit's economy as well as the national economy.
And we're talking about Detroit as well as the national economy. Detroit, Birmingham, New York, Oakland, Baltimore, Washington, D.C., Miami, Atlanta, it makes no difference. The point of it is if you have money to spend, is that we have to look within our own communities to spend our money for commodities, products that we need so that we can continue to have our businesses have a foundation and not fail. Hey, so let's bring Jamie and Kamal in. I'm going to read a bit of their bio. Jamie Miner of Rhode Island. Jamie, how you doing today? Is what I call a cryptocurrency expert. And Jamie is also a small businessman as well. Matter of fact, I think that many of the businesses that he's been involved in aren't small. He is a angel medical legal cannabis collective person, license and design cultivation centers, and we'll find out more about what that means, as well as he has dealt with construction projects, significant construction projects up there in the state of Rhode Island, and we'll find out more about that, and mortgage banking as well. So Jamie has a significant lens as relates to money, to the economy, and all sorts of things. But the biggest thing he is representing us today is a analyst and advisor and expert, I call him, on cryptocurrency. And then we've got Kamal Hubbard. Okay, and Kamal came across blockchain technology in 2013 while conducting postdoctoral research in federal securities litigation at Stanford University under a former Securities and Exchange Commissioner. Ever since, he has been on a mission to bring distributed ledger technology to the masses, and we are the masses. He has the unique ability for explaining the technology in a relatable fashion that has helped lawmakers, business leaders, and investors make key decisions to improve their desired outcomes. And Lord knows we want him today to explain to us in a fashion to change our desired outcome, and that's to be more successful and more stable financially. Kamal is a lawyer by training who is certified in fraud examination, cybersecurity, and decentralized finance. Kamal spent 2 years conducting individual research on Bitcoin and blockchain technology before entering a position in cryptocurrencies. He is a contract compliance officer, the founder of the blockchain consulting company, Cage Chain Media Group. He has served as an advisor to numerous blockchain projects and sat on the board of the North Hollywood-based All Market Cryptocurrency Exchange. Mr. Hubbard had the privilege of testifying before California Senate Banking Committee on the basics of blockchain and Bitcoin. Kamal also served as part of the Blockchain Advocacy Coalition in support of California bills AB 2658 and SB 838, which provided a definition of blockchain under California state law. Mr. Hubbard was also part of a team in 2018 that educated Congress on the nature of blockchain commodities. Both of you, distinguished gentlemen, welcome with those phenomenal, outstanding backgrounds. And it's imperative that we have an opportunity to get you to educate us as you educated those around you that use your expertise that may not look as we look. And as I said in the beginning, viewers, it's important that we hang in there for this conversation. Sometimes when we look at things we don't understand relative to financial literacy, that is not sexy and appealing and puts things in a positive nature, we tend to go away from. But I guarantee you, if you hang in here today, you'll come away with some action plan. So Kamal, let's start off with you, man. How's everything going?
It's going great. Thanks for having me, Michael, and thanks for especially having me with your guest, Jamie, today.
Hey, fantastic. It's good to have you and Jamie as well. And so we're going to start with you, Kamal. And let's go to that first slide, that second slide of Kamal's. And Kamal, if you can give us a sense of an understanding and go right to the second slide of the banking crisis in the United States that we heard of a couple of weeks ago, particularly with the savings and loan. Are we get ready to go through back to something that we saw happen in 2008 and 2009?
Yes, I think the bank failures are going to continue, most likely with smaller regional banks. But what happened, especially with these three key banks, Signature, Silvergate, and Silicon Valley Bank, is they weren't able to adequately pivot in the face of these aggressive Fed rate hikes that are taking place to try and stem inflation. Something that's also interesting about these banks failing is, they all had exposure to crypto. They had some degree of crypto clientele that affected those deposits that most likely did not make them as nimble as they could have been in, once again, acting in the face of these rate hikes. But going back to your point about things looking like 2000 again, yes, and after the subprime mortgage crisis, this is basically calling people's trust in the banking system onto account, right? Do people trust the banks to hold their deposits anymore. And that's that's basically how Bitcoin came about. Is, there were a number of people who question, centralized banks and centralized banking, and there are people who wanted an alternative.
So, Jamie, let me ask you a question. Kamal, before I go to Jamie, let me ask you a question, Kamal, because you mentioned that they had some exposure, these banks, to cryptocurrency. Was that a negative? Given what happened with crypto a few months ago, was that a negative? And should we still be encouraged and intrigued about crypto if that was the case with these three failures with savings and loan banks?
Yeah, and I think it's also important, really quick, for me to just kind of put out there, I'm not a financial advisor. None of this is financial advice. It's not legal advice, tax advice, or any sort of life advice. It's really for informational purposes only, and I'm happy to share the information that I can today with everyone. But I don't think it's a bad thing that those banks supported the blockchain and cryptocurrency industries. This is technology that is a part of innovation that the world is participating in. And why, as the United States, should we say, no, let's not support innovation in this country? Because if we don't, it's only going to go places outside of the country where we cannot capture the economic benefits.
So let me ask you, Jamie. So do we have to be concerned as a community? Like, for instance, I don't have to worry about my money in a bank if it's under $250,000 because they're FDIC insured, right? Even though FDIC is upside down, I believe, relative to the trillions of dollars in banking, right? As a person that has less than $250,000, do I have to be concerned, Jamie? I mean, what does that banking crisis mean to you? What are you guys feeling up there in Rhode Island communities relative to that banking crisis? Is it a big deal in our community? Should we care?
Well, yeah, I think the bottom line is that people need to know that when you put your money in a bank, it's no longer your funds. Those deposits are the banks. They sweep them into once you put them in your account, it gets swept into a banking account for them to then, and basically what a bank does, they invest our deposits, they keep the profits. And then when you try to withdraw your deposits, in the case of these situations where they have concerns about whether or not the banks have enough liquidity, or if they're, and clearly in this case, they didn't have as much liquidity, and that's why the government had to go in and basically bail them out. So it's ironic because when in the crypto world, like a Coinbase exchange, they're the opposite of a fractional banking system. They're a full reserve banking system. So in some ways, they're a lot more safe than even our banks are today. I do think that, Mike, that although that it seems like they are crypto related, I agree. And, it seems like the SEC's threatening to sue everybody. But I do think also, in addition to that, we've seen some other narratives develop. For example, Fidelity is announcing that they want to offer digital currency custodials for their clients. BlackRock's also announced that they want to offer crypto trading and custodial for crypto clients. Between the two of those, they have about $15 trillion in assets. In addition, NASDAQ also announced that they wanted to offer custody for crypto clients. So I think what's happening is, more so than anything, is that it seems like a coordinated effort to centralize who can control custody of crypto. Who the big banks can have the custody of your deposits, and kind of move away from the smaller banks and centralize it into the larger banks, where they can have an easier way to control it and monitor the activities of these depositors on both crypto and in traditional banking.
Hey, so Jamie and Kamal, I don't give a damn. Okay, I'm the average viewer out there. I don't know what the hell you're talking about, really. I have no idea about BlackRock, right? But yet, from an educational perspective, we know that we're missing the mark, not understanding crypto as a community, right? But I don't understand what you're talking about. I have no idea what it means because I am used to green George Washington, Thomas Jefferson, Abraham Lincoln on the back of my tradable commodity that I use to go buy eggs. So what are you talking about that I should be concerned or it's relevant to me as a community? If we as a community of black folks, let's say middle class, let's say lower middle class, because there's significant money that's exchanged with businesses in all our classes, right? Break it down to me how relevant this is to our economy. Why should we care? Kamal?
Well, I just want
Go ahead, Jamie. Go ahead.
Well, I think in general, the bigger picture I'm just trying to communicate is that if we know where things are headed, it's easier to protect ourselves and to hopefully prepare for.
Where is it headed that the viewer needs to understand to protect itself? Tell us exactly where it's headed. If I get in my car and take 70 west, I know I'm going to Colorado, right? So tell me where my dollar is going in the bank in 2 years or 3 years so that I understand the relevancy of the conversation that you say that I have to have with you.
Well, when these local or regional banks go down and then they're centralizing them to the larger banks, I think that's the major concern I just want to make people aware of.
Kamal?
I think, yeah, and to Jamie's point, those dollars that you're talking about, the government essentially wants to make them digital. They want all or most banking transactions to be digital. And
What government, Kamal? Our government wants digital currency?
yes, they're currently working on a central bank digital currency, which will be essentially a digital dollar. And very, very concisely, the United States government wants you to use their digital money and not cryptocurrencies. But if you do use cryptocurrencies, just like Jamie said, they want to have as much control over it as possible. And they want to know what you're doing with your money. And it's really looking like a convergence of the government, big banks, and big tech. And privacy is not going to be a large part of that whole thing, unfortunately.
Hey, so Kamal, let's go back to digital currency, to something that people can relate to. Back in 2007, 2008, the last banking crisis. Isn't that when digital currency kind of surfaced and came out of its closet back in the last banking crisis? Digital currency became kind of another new way of investing money.
Yeah, and it came out of the subprime mortgage crisis that led to a global credit crisis where instead of having a monetary system that is centralized through quasi-governmental banks that issue fiat currency, it was a decentralized model where there is no central bank authority, and those networks could be owned by the people and distributed essentially throughout the world.
So the networks could be owned by the people. The networks could be owned by the people, right?
Or
that's what you said.
No
So
one central authority, essentially.
So how could we as a community gain, in your opinion, understand, as you said, you're not a financial advisor, you and Jamie both are what I call experts in that because you have studied it, particularly more so than many of us have done so. How can we figure out, I mean, are our banks, you know, there are some banks in the US that are Black-owned banks. Is this something that they are looking at as well? But how can we as the people take advantage of what's happening in the world of electronic financing that you said the government's going towards now anyway? What do we do?
I think now is a perfect
Either
time.
One of you.
Oh, go ahead, Jamie.
No, go ahead. Continue, Kamal.
Thanks. I was just going to say now's the time to become aware of what these protocols are, how they operate. And so you don't have to put all your eggs in one basket, but begin diversifying into distributed, decentralized digital assets. Because going back to that scenario I posed earlier, what happens when the government wants to turn your money off? We're all Kanye West then. And not to say you don't have to say the things that Kanye West said, but in terms of a financial system that says, no, we don't think you need this money anymore, right? Or we don't want you to have this money, or we don't want you spending it here or doing the things that you're doing. We have an option that is outside of that system that allows us to transact in a parallel system that ultimately, which goes along with the argument in my book, to have a parallel system that takes discrimination out of the equation.
And Mike, think about it like this as well. If I can add on to Kamal's what Kamal's saying is, the current system we have is based on printing money that is basically devaluing, which is causing that inflation that you're talking about, making our dollars purchasing power less, right? So now we have a new opportunity, a new innovation of money. That's basically what Bitcoin and cryptocurrencies are. It's an improvement on the current money system, where instead of printing more and devaluing, it's relied on scarcity. And instead of printing more, which creates inflation, it's actually reduces supply and then therefore increases its value. So, it's an opportunity, and I think Kamal hit on a good point. If America would embrace innovation instead of trying to hold on to its power and control hold on a current system that's not working for the banking, for what value of money is supposed to retain, for the wealth gap across the country, there's a lot of reasons why this is the direction that it should head. As far as people getting involved in it, people who get involved early, if you're a founder, an early adopter, or an investor, those are the people who usually take advantage of opportunities like this, and they are life-changing opportunities. This right now, I believe, is one of our opportunities for people, regular people, to get an opportunity to vault ahead in a way that we've never seen before.
So let me understand. First of all, Kamal, back to your analogy of all eggs in a basket, and at almost $1 an egg, or they're about 75 cents an egg, I don't think anyone can afford to buy an egg anyway. And to what you all are saying, and viewers, what we are trying to get you to understand is getting ahead in the learning curve of where our economy and where our financial institutions and our government are going, for the point, I believe, Kamal, of investing in that. Is that the whole point, to invest in? And Kamal, if you want, we can pull up a couple of you. Why don't we go to slide three of Kamal's, and let's start there, and let's go backwards in terms of some of his education, he and Jamie's education of us, according to the slides that they put up there, so that we can really drill down and leave here with a better understanding of why we should be involved in this. Because I'm still kind of not feeling it. Go for it, Kamal. We'll move our slides according to you, Kamal. We'll let you go at it, and then we'll do the same for Jamie.
Well, I think based on what happened in the cryptocurrency and digital asset market last year, that caused people to question their confidence in cryptocurrency. So I'm talking about what happened with Terra Luna, as well as FTX and Sam Bankman-Fried. Sorry.
That's accurate.
Yeah. Okay. So SBF, excuse me. That's not his name, but there's definitely fraud present there, or alleged fraud. Innocent until proven guilty. But nonetheless, when these banking failures took place, we saw Bitcoin go back on the rise, because now people are questioning the banks. So I think we have to have some degree of balance with everything. I'm not sure necessarily if someone out there, those opportunities to find that crypto lottery ticket are still out there. I think there's definitely opportunities in the market, but getting that 10,000, 1,000x on a rare crypto gem, it's going to be a little bit harder than it was in the past to find those. Are they out there? Yes, but you definitely want to diversify, not just into Web3 and blockchain technology, but some existing financial products out there too. You always want to talk to your financial advisor to find the most appropriate thing for you. But I think when it comes to things like generational wealth, it's still good to consider life insurance, based on the markets, also high yield savings accounts and certificates of deposit. But once again, if you have the money and you can look at digital assets, now's the time to start using them and become acquainted, educated, and become an operator in decentralized finance, because that is the future. And once again, these companies want to get as much of a foothold in them as possible.
So Jamie and Kamal, are you really, we as a community of Black people, are you really talking to us about this? Is it something that we really should care? And I know I've said this before, right? Why is it that we must understand this? You said life insurance. We know that housing still is a good generational wealth investment. A house is always the case. And then you talk about cryptocurrency. You say if we have discretionary income, we're in an inflationary period heading towards a recession, right? Where most people are upside down in our community, don't realize it because we don't always measure the fact that if we only got a 3% bump in our salary in 2023, and we came into 2023 with 8% inflation, we know the price of eggs are high. We know the price of bacon is high, bread, baked goods, etc. So the same shopping list that we paid $50 for last year, we're paying $75 for this year, with about $10 of that 25 that we got in a salary increase. So that left us with a negative $15, right? That we've got to find. So how do I take my life and my income and my asset and invest in something futuristic that you're speaking of now? Any tools or tricks to that trade? Or do I look at my tax returns and just take half of it and set it aside and invest it in crypto? And what kind of return do you think that I would see in, say, 3 to 5 years if you think financial institutions are going that way? And I know I asked a bunch of questions there, but I think you guys understand what I'm saying.
Well, Mike, I'm an entrepreneur. That's kind of my background. I haven't had anything. I had to build everything that I've ever had. As far as this crypto space, this isn't something that I got involved in because I just thought it was something cool and, I'm trying to sell people on or anything. I've done everything. I've literally done everything. I've tried every business and I've made some successful, and I've done a handful of them that didn't work out. But in every one of them, I've learned how to improve the next opportunity, and I've educated myself and I've improved myself, and I've become stronger through my adversities. And I think the one thing that we got to do is we got to start to be willing to sacrifice our time, to start to build some skills, to start to learn some different things. I was grateful. I didn't have a mentor that knew this stuff, that was just, hey, Jamie, I want to show you how you can change your life. I had to seek out and I had to invest into myself, and I paid a mentor to teach me the right way and how I needed to think differently. What he would tell me more things about my mindset that changed me more than anything about that I did that was this transformational difference to my finances. He taught me how to think differently. He taught me what people who have money do, people who are wealthy, how they think, how they move, and people who are not wealthy, how we move. And the more that I was willing to adopt the mindset of thinking like someone who has money, who's willing to invest, then the financial improvements in my financial knowledge started to grow. And then, as you know, Mike, you asked the question, what are we doing? We're talking to our community. What I'm doing is sharing what I know with people, my friends, mentoring, and trying to get people to just dip your toe in the water and just see it safe.
Receptive? Have your friends, have they been receptive? Have you seen in communities, and same question for you, Kamal, where you see not necessarily hordes of Black people, but there beginning to be a movement of our people in our community towards understanding crypto or wanting to understand crypto? There's no doubt in my mind that it is absolute necessity that we understand cryptocurrency and the movement of the financial market. As you all said earlier, one of you said earlier, part of the reason we're in an inflationary period and the feds are raising interest rates is to slow down things, because they put so much money out in the economy during the pandemic, and it wasn't money that was necessarily upheld by the gold, right, behind it. We just printed money, right? And we have to understand that. And so, as we said earlier, when America catches a cold, we catch the flu, because we don't understand the nature of how money moves and what we can do in terms of movement. And we have to force ourselves, as you said, Kamal, to invest something somewhere, particularly if this is the new day. But are you seeing people in our communities finally get it and understand? And what happens if we don't? Kamal?
Well, I think what is very important about this conversation is, you have someone like myself who has an academic background. I took 2 years to do individual research on this technology before I felt comfortable enough to enter into a position. And then Jamie's also here, and he's a successful entrepreneur who said, hey, I just rolled up my sleeves and was self-taught, and we're both coming to the same conclusion about it. I mean, I'm very
repeat the conclusion for us. Give us a conclusion that you both, because I hear you, I understand. I want to make sure you, the viewers, understand with these two academic experts, I consider them on crypto, they're compelled to educate us as to the consequences and the benefits of something that we don't understand. So what is it that you see, Kamal? What is it that you see?
Well, waiting 2 years to study is far too long, right? Jamie jumped right into it, and that was part of it. If I had done that and, kind of put some more of my skepticism aside, I'd be doing a lot better than I am now. So you got to start somewhere, and you got to start wherever you are. Like, I started with $20, and,
yeah, there you go. There you go. Now we're talking. So pull me back in with Kamal. So Kamal, you said you would be doing better than you're doing now, and I think that people are thinking that you're talking about investment money and that you've made a few bucks as a result of investment money, right? And we're still counting things in dollars, because even if you're dealing with Bitcoin or Ethereum, it still comes out to $1 if I cash out, right? So I'm still measuring it in the almighty green dollar and silver coin financial stuff, right? We're still counting it that way, right?
Right. Well, I don't want to get too complex here, but yes, it's going to be dollars. But here's where the dilemmas present themselves, right? From a macroeconomic perspective, right? Let's just say I have $10,000, I put it in, and Bitcoin goes up by 20%, like it has this year. And I cash that money out, right? I put $10,000 in, and I'm getting $12,000 out.
Bitcoin went up how much? Bitcoin went up 20%?
Yes, at over 20% this year. So this had to do, once again, when the bank failures took place, people started to go back to Bitcoin. The other thing about this, too, is right now, Also, in addition to what happened in crypto, people started taking their Bitcoin and other cryptocurrencies off of centralized exchanges like Coinbase, Binance, Qcoin, and they began to self-custody. So by doing that, there's cryptocurrencies that are coming off the market. So that readily available crypto or Bitcoin that used to be at an exchange where people can buy it is no longer there, thereby making the price go up. And once again, too, people questioning banks, is their money safe in banks? And Bitcoin, we'll just use that as the example, is becoming more and more scarce. So thus the price is going to go up. There's going to be higher demand for it, and the price will only continue to go up because people will say, hey, the best way for me, or one of the better ways for me to hold this is to do it myself. Not let a bank hold it, not let Fidelity hold it, not let Coinbase hold it. I have control over it, and people are going to find more and more importance in that process.
Hey, so let me break it. Let me ask both of you. So if I've got $200 in a savings account in the bank, maybe $500, maybe I have $1,000 or $2,000 in a savings account in the bank where the interest that I'm drawing is less than 0.5 point or 0.5% a year, right? Around 0.5%. Are you saying that it's best for me to tap of what I have in savings and just go ahead, whether I understand it or not, and put it in some sort of Bitcoin or some sort of, so would it make sense for me to do? Because I think our people can relate to that.
Well, listen,
Jamie.
For me, our mastermind group that I learned with my mentor in the last cycle taught me about investing. So, and now seeing everything with the banking system, knowing that essentially your deposits are at risk. They're at risk from the bank owner making a bad investment. You're at risk for the regulators shutting down the bank and limiting your access to your funds. If there is a profit, the bankers are keeping that. So there's really, you tell me, Mike, you probably get more money than all of us over here. What do you feel putting money in the bank is safe for your money? I don't. I'm trying to figure out how to get my money out of the bank.
I have been stupidly trained to think that it is, because they tell me that my money is guaranteed up to $250,000, right? Which, as I said earlier, is not an issue because I don't have to worry about that, right? But you're saying that my money is not guaranteed, but the government says it is. The government just bailed out your 3 savings and loans that failed that were invested in crypto.
Well, FDIC insurance is supposed to be there in case of these failures, but the assets in the FDIC balance sheet is insufficient to cover the $9 trillion in deposits that are on there. So it's an illusion. What the government did was just print more money. What printing more money does is it devalues the money that we have. So their solution to protect us by giving us back the money is giving us more money that's worth less. So it's really just an illusion. And that's why I was kind of talking about the bigger picture of what's going on. And, and to your earlier point, Mike, there's other ways. It's not, I'm an investor, that's how I think is the best way to get involved with it. But, if you wanted to learn about the space and say you're interested in social media, well, there's crypto companies that are looking for social media ambassadors that could, and it's a job. There's research analysts for these. There's sales people involved in crypto. There's jobs that's involved with this too. So getting involved with this on any level, it's a growing industry. It's a great technology. There's a lot of ways that
viewers had mentioned in there that crypto itself is not guaranteed, or crypto itself is kind of dicey, and what backs Bitcoin. They mentioned Bitcoin specifically. Anybody want to address that question?
So what's backed by Bitcoin?
What is Bitcoin backed by? What's behind it? The Federal Reserve? Because it's not even regulated in the United States right now, right? Cryptocurrency.
Not the actual. Well, they're regulated as commodities, or at least most crypto assets that are not securities or deemed securities. But what are U.S. dollars backed by? U.S. dollars used to be backed by gold. They're called fiat currencies because they're backed by whatever the government says. A dollar. The government says a dollar is a dollar, and that is fiat currency. We don't have the gold standard anymore. Now, when it comes to the Bitcoin network, what's backing that? There's a lot of ways to answer it. Really, just like people put the full faith and credit into those dollar bills, the Bitcoin network is a group of people who believe in the value of Bitcoin. Sure, that's esoteric, but so much so that they will build data warehouses and build racks of Bitcoin miners. Those Bitcoin miners can cost up to thousands of dollars. And those are the machines that are keeping the Bitcoin network going. So it is backed by real hard assets. Another thing to also keep in mind is traditional and legacy finance has a very intense interest in Bitcoin too. They are the ones that are willing to enter into some of these large lot deals for Bitcoin, getting as much as 100, 1,000 Bitcoin at once. These are hedge funds, family offices, sometimes banks to a certain extent, who want that much Bitcoin. So if Bitcoin isn't worth anything, why would traditional financial organizations want to buy into it?
And
So
Mike,
to the question about what backs Bitcoin, right? What backs Bitcoin? And you purchase Bitcoin because, I saw a question here, which I've heard before, because now we're getting to the real deal in terms of our people's perception of this, because they don't understand, I believe, it's a scam and that you ultimately buy cryptocurrency with dollars anyway. So if I was to go and buy crypto, I use hard dollars anyway, right? That
right,
aren't
and
worth
it's
anything
100%
according to
liquid.
what you say.
Yeah, it's peer to peer. If I put in $100 into Bitcoin and I send you $100, there was $100 from my pocket that went to yours. I mean, it's backed by the full 100% dollar value of whatever we put into it. So that's the answer for what it's backed by. And let me also say this too: don't let the media and the narratives fool you out there. The United States government, they own over $200,000, 200,000 Bitcoin. They have possession, ownership of 200,000 Bitcoin themselves. When Bitcoin hits $150,000 price, that's $30 trillion. They could pay off the entire national debt. So, this is the message is that they are anti-crypto when they hold $200,000 200,000 actual Bitcoin. It's a contradictory message. They know that this thing is important, that it's valuable, and they wouldn't have it on their balance sheet if they didn't.
Kamal, what does the rest of the world look like in terms of its markets, its financial markets relative to cryptocurrency, be it China, Korea, Russia, England, or Europe, right? Where do the other markets in the world rely on cryptocurrency? How are they dealing with it?
Well, I mean, I think when you talk about the rest of the world, the best place to start right now is with Russia and China. Russia has used blockchain and crypto to avoid sanctions that the West has put upon them. They've used Bitcoin and other cryptocurrencies so that they can transact and sell things that they want to sell, so that they can have money to do the things that they feel they want to do. Obviously, China is in a very similar situation where they've tried multiple times to ban crypto. And ultimately, what China is looking to do, not just on its own, but with a group of countries, is to remove itself as much as they can from dollar dominance, right? So you may have heard of a group of nations coming together for what's called the the BRICS. So it's a number of emerging countries that want to have their own monetary system. BRICS is Brazil, Russia, India, China, and who's the last one? I don't know.
So explain this picture up here, Kamal. I believe this is one of your Jamie, explain this picture of these leaders, man. And they were meeting on, financial markets, and I don't see the United States there anyway. What was the significance of this meeting, Jamie?
Yeah, it's just basically, I think, sending a message that, the reason I love Twitter so much is because I get to hear some opposing views of people all over the world. And, a lot of what I'm hearing is from people who share about what's going on in these opposing adjoining nations is that, I think they're looking at like, this is our chance. I think they're unhappy with maybe some of the controls and some of the policies that they've been forced on to those other countries. And, when you're the reserve currency, which, America has been, you can kind of, get your way a little bit more than other countries can that don't have that backing. And so now you have the new, China's got the yuan is their currency. That's would be the next reserve currency that possibly could be considered. It's also the enemy of America. Now they match up and align with Russia, who is a military power. And then you have these other strategic resources, like Saudi Arabia and the oil. And so now I think a lot of the other countries are saying, you know what, hey, America looks weak right now. I think we can start to reestablish and get some more control in this global economy. And we don't have to necessarily be limited by whatever America dictates to other countries. I think, what's interesting about what's happening is going on in these other countries is that now we're in a situation where we're in a nuclear age. And, people talk about nuclear war and different. I think when I think of nuclear possibilities, I think that it's a threat and not an actual consideration, because if you use nuclear powers, then it's mutual destruction. So I think they're really just there as a warning that we want to be considered. I think things are going to look a little bit more separate now. There may be a dual reserve currency and maybe even a third private one that's decentralized, like Kamal and I are talking about with Bitcoin and cryptocurrencies as an alternative choice. So there's a lot changing in the world, and it's going to be interesting to see how America reacts to what's going on, because this is the first time that countries have really gotten this far to align against what America's policies and in their world control has been over the last, I don't know how many years.
Hey, Kamal, and that's important, Jamie, that we see things from a wider perspective than what we are trained here in America. That's why some of the credibility is what others are doing that we may not be doing. But Kamal, tell me, are we going to have an I told you so moment in 10 or 15 years? And if so, what are the indicators of that, Kamal? And when I mean I told you so, here you are saying to us that the financial vehicles are going to change in the United States, where we'll be leaning more towards cryptocurrency because of the ability for some of the fraudulent ability and some of the other issues dealing with cash currency. Are we going to be, is the United States going to be further down this road of crypto in 10 to 15 years than what we can imagine right now in your estimation?
Yeah, I would like to think so. And this is, to me, just seems where technology is moving as we get closer or more into what's called Web 3.0. We're moving away from an internet where we're using social media to more of a spatial web, where we will be relying more on technologies like blockchain, artificial intelligence, and metaverse and things like that. So I don't.
And you refer to blockchain a lot, Could you go back and explain to us what blockchain is? Is there a slide that you have that explains blockchain? Because I hear you,
Right.
but it doesn't resonate with me.
Sure. So I don't have a slide, unfortunately, but blockchain technology is also known as distributed ledger technology. And just like banks have ledgers and accountants have ledgers, it's a system of maintaining proper accounts of really when it's applied to cryptocurrencies, where cryptocurrencies are, how much there are, how much are being added to the system, if they're being lost. An analogy I like to use is that of a library, right? If you check out a book, you go to the librarian and they stamp your book is due on in a month from now. But in their system, they know what book is checked out, who has it, when they checked it out, and when it's due. That's essentially how blockchain operates. You have blocks, what are called blocks of information that operate in a sequential fashion to basically verify one another so that essentially there are no entries that are erroneous. So the network verifies itself through a process which is called consensus, essentially, where everything is agreeing upon each other. Things are double and essentially triple checked and confirmed that transactions are true to a given network.
Right. And Jamie, let me ask you, Jamie, before we wrap up, I tell you an hour is gone and we're going to get you back here, just like I said before, because if you guys believe, and I believe we've got to understand this, we've got to understand, because we don't want an aha moment and be told that we did not give our viewers information. And we're going to keep drilling it back every couple months, bringing it back into certain terminologies, become not unique anymore, but usual, such as blockchain and cryptocurrency. And, people in our community, it appears, don't trust it. Jamie, you have an example of some young people, a small group, a cohort of young people that we backed and purchased crypto for, right? As a power of example to what you did, I believe, in November, December of last year, with the small amount that 60 Minutes in Black America invested in these young people by purchasing a small amount of crypto. Give us an overview of how that portfolio is performing.
Yeah, it's been incredible. Honestly, beyond even what I thought we could have this year.
Incredible, quantify incredible for disbelievers in our community that can't relate to what Kamal said. Well, I probably could have done better. Well, I think he's a multimillionaire in Bitcoin. He says he probably could be better. We want our people to relate because, tangible. Hey, we're up 20%. We're up $20. We're down $30. That's what it is that, man, all of a sudden you've piqued my interest, right? So tell us hard-wise what it is that done real good. What does that mean?
Well, we research projects and we share within the group all the time. So the portfolio we put together on the show that we initially did is up 40% year to date. So that one I know. Now,
you said that 40% on $100 is $40, right? 40% on $1,000 is $400. So in other words, you in 3 months, or let's say 5 months, the portfolio has increased 40%. Kamal talked about 20%. Hey, wake up, people. There's something happening, whether we understand it or not, to have experts like Kamal and Jamie explain to us that there's market movement here, that the traditional financial institutions of savings and loans that are failing aren't giving us that return. So you're saying 40%, Jamie, is what these young people have realized in an increase to what their initial investment was?
40% overall in that portfolio, but individual projects that I put into the chat group, some of those, for example, there was one because AI was really big this year, and ChatGPT and
break it down for our people, man, because they don't understand what AI is. What's AI?
So artificial intelligence is basically the next great technology as well. Just
So
in
of
addition to this.
artificial intelligence, give me a sample of artificial intelligence. Is me cheating on an exam artificial intelligence? I mean, what is artificial intelligence, man?
Well, Tesla's cars are, their driving technology is powered by machine learning and artificial intelligence. So that's part of stuff like that. So there are crypto companies that use artificial intelligence technology in their companies. And so knowing that's something that's really popular right now and really innovative, we researched, there was 41 different artificial intelligent companies in crypto, and we identified a few of them, one of which was it's AGIX. And in the time frame that we introduced it, it was over a few months. And if you put $100 in that, you would have had $800 return just on that one particular project. Now, I don't know if who's putting money in the projects in our group individually. I don't get into their accounts, obviously, but that was one of the coins that we researched, and it did an 800% in the last three months. So $100 turns into $800, by just getting educated and learning and sharing in the group stuff that we've done.
That is powerful, man. And we're pressed for time, man, because it's amazing how quick an hour goes. And Kamal, I want you to answer this question by a viewer. It says, can crypto be used to start an endowment trust fund?
Yes, absolutely. In my book, I talk about what are called decentralized autonomous organizations, where essentially you have people who come together in a common interest to have a business purpose. And very similar to what Jamie was talking about, you can automate that company or automate that fund where people are either donating or contributing to it. It grows, and then you're able, with that growth, you're able to endow or pay certain other causes that you want to benefit or enrich. So yes, that can very much be organized and created using crypto.
Wow, fantastic. And Kamal, can you talk about your book for a minute before we turn it over to Jamie as we begin to close out? Talk about your book and what people find in it. I think they had it up there in terms of where your book is and your website. But why would I, Mike Haynie, maybe middle class guy that works at Social Security, makes $75,000 to $100,000 a year, why the hell would I want to read DeFi for the Despoiler? Why? Tell me why I need to get your book, Kamal.
Sure. Well, my book is DeFi for the Diaspora. It's creating the foundation to a more equitable and sustainable global Black economy through decentralized finance. And the book covers the history of money, how people are using blockchain and cryptocurrencies to organize and get things done that we're not doing quite enough of in our community. It talks about the technology, how it operates, and how we can use it to close the racial wealth gap by, once again, creating this parallel system, economic system, that at least doesn't have the historical discrimination that the traditional financial system has within it.
Powerful, powerful. And this isn't the last time you'll hear from Kamal. We've heard from him. This is the second time. Kamal's been on 60 Minutes in Black America. I am praying that he comes back in a couple more months, because we're going to keep hammering away with this, just as Kamal says, because it's imperative that we begin to chop away at the inequality of wealth, particularly in this country. Jamie, final thoughts, final word to our viewers, man. And we know you're going to be back because you've got our cohort of young people that you're investing in. Final thoughts, man, in terms of getting people's attention as to why it's important for us to understand crypto.
Yeah, I think the best advice I can say is to get involved. There's skills that you can learn. There's jobs you can get. Invest. Don't worry about losing money. I know that sounds contrary right now, but honestly, by losing money and investing into myself, I've become more financially wise. And the risk versus return right now has never been greater. And when the economies are not doing well, this is the time where our non-wealthy mindset is to save, hold on to our money, and to take a risk. But The best advice I've been given by my mentors is to change that mindset, to be willing to risk your money now. And that's when you'll really see the biggest financial returns that you can. So do the opposite of what you would normally do in these situations, and to risk into bad economies instead of protect in bad economies. And that's the best thing you could do.
I appreciate it. I know more and feel more comfortable than you guys were when you weren't here last time. I understand the language is starting to take, and I'm not the most intelligent person. And so the redundancy of what you're saying to me and how you're breaking it down is important. So I can only imagine how many others may feel as well. And with that, I'm saying to you, please come back in a few weeks, maybe next month if you have the time, so we can continue to chop away at this. It is imperative, and I know it's the way of the future with our U.S. and our world economy. Thank you both so much for being here on 60 Minutes in Black America. Thank you, Jamie. Thank you, Kamal. We'll see you in a few weeks, hopefully. And so you're watching 60 Minutes in Black America. I know that we're over quite a bit. You know, it's been a great show as we continue to chop away at cryptocurrency. Jamie mentioned 40% return. Kamal talked about 20% return. And so does it necessarily make the difference that we don't understand inherently what this is all about? The questions in the chat that we heard about, can you use it for endowment? Is it a pyramid scheme? You know, the biggest scheme I think sometimes is me getting a 0.5% on my money in a savings bank account, and then my money going belly up as it did a couple of weeks ago with the savings and loan crisis. We know that when it's the downside of, as we said before, of any opportunity is the time for us to invest. So I urge you all to look into crypto, to look at your finances, to look at inflation, to understand the market and what's happening now in our economy and with your money, so that you find yourself not underwater, but above water because of strategies. We had Teddy Prelo here a few weeks ago that said, as you begin to get your tax returns, take half of it aside. Buy yourself a life insurance policy, as Kamal had mentioned earlier, and Teddy said as well, if you can't buy real estate, invest, as they said earlier, both Jamie and Kamal said, invest $20, $100, $300 in cryptocurrency, regardless of whether you understand or not, because it's a down market and it is going up and it's more stable than what we've seen in the cash-based market. And we're going to bring these guys back in a few weeks so we can continue to educate and understand, because it's important for us as a community, as Kamal said, to begin to level the playing field in terms of racial wealth gap. Hey, next week on 60 Minutes in Black America, Easter Sunday, we'll be back talking about resurrecting education in the Black community with parents, grandparents, and our leadership, so that our young people can begin to thrive and grow educationally. We'll have Dr. Moses McClutchin from Los Angeles, California, as well as Miss Karen Endor, an educator here locally in Baltimore, Maryland. I thank each of you for watching another episode of 60 Minutes in Black America. Please, if you have not subscribed to our YouTube channel, go up on YouTube and subscribe to our YouTube channel, as well as see some of the other great conversations that we've had on 60 Minutes in Black America. Good night, have a great week, and thank you again for watching.